If there is any vulnerability in a coin, a platform, a chain, it's always going to be exploited. And with those algorithmic stable coins, the fact that somebody could come in and flood the market and then pull it off really quick and then buy it at a discount from the project itself, that was a vulnerability that could have uncracked the peg and removed the peg from UST, which was the stable coin of Terra Luna. I think this year in general, with all the things that we've seen in crypto that we didn't think was possible, a lot of people didn't think it was possible to get a bear market. A lot of people didn't think Celsius could crash. A lot of people didn't think Terra Luna would crash, that UST would unpeg, that Voyager would go insolvent. You got to factor in that black swan when you're making decisions.
Look, I was on Wall Street for 15 years. I traded stocks and bonds and commodities, every market under the sun. Nothing prepares you for crypto, because crypto is 2, 3, 4 times more volatile than anything I've ever seen in the marketplace.
I got to trust what I say a lot more. I got to trust what I believe because it's based on data, it's based on research. What happened is last year I was basing it more on the feelings. You got to get rid of your feelings in crypto, in markets and trading in general. And so this cycle on this bear market, look, I believe I know when it's going to bottom. It's going to bottom end of November, beginning of December, certainly within a range of error where it could happen now, it could happen through January. But when we see prices go down during that time period, we're going to trust it. We're going to allocate our capital. We haven't got there yet. During the last cycle, we didn't trust ourselves enough. This cycle, we've learned we got to trust ourselves more in what we know to be true. And this is why it's so important for people to do their own research, make a plan, and implement it.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Ben Armstrong, the broadcaster, investor, and cryptocurrency influencer. You are the founder of the Bitboy Crypto YouTube channel, where you post daily market updates addressing all the latest news to a massive community of crypto enthusiasts. Your aim is to provide education and entertainment in equal measure and have amassed the largest following of any crypto platform with over 5 million total subscribers. 1 year ago, you were last on our show. You warned of an upcoming bear market in 2022. And you believe that the Ethereum merge is the biggest and most significant event in cryptocurrency history that will transform the industry as we know it. You've written a new book, Catching Up to Crypto, Your Guide to Bitcoin and the New Digital Economy, which offers a comprehensive breakdown of Bitcoin, the blockchain, and the future of money. Ben, welcome back to London Real.
Yeah, thanks, Brian, for having me. I always love being on this show. I think, people get a lot out of it. And, like I always say, any day we get to talk about crypto is a good day.
No, it's all good. And, I remember us talking in September last year and, everything was going up and you were saying, look, the bear market is coming. And quite frankly, Ben, you were like a party pooper. And I remember, I've got an academy and I have all my students in my academy and they're big fans of you and I'm always quoting you and, and I'm always talking. I was like, look, Ben's talking about this happening. It's just to remember, and we always talk about stop losses and stuff, but I remember we had our 10-year anniversary and I was interviewed in the studio for our 10-year anniversary. And that's when Bitcoin hit its high of 69,000. And it's interesting to know that you were talking about that. And I think it's because you've been in this market so long that you know the cycles come and go. I think you say it's like 3 steps forward and 2 steps back. But how did you know that? And how were you comfortable saying that even back in September?
Yeah, well, it's just been very obvious. People are always trying to reinvent the wheel in crypto. And there's this giant kind of like contest of who the smartest person in crypto is. And people are always trying to come up with these really unique, like complicated theories on where Bitcoin is going to go and why it's different this time and how the network and the adoption plays. No, guys, it's a 4-year cycle. That's it. It's simple. It's way more simple. And people that are real traders out there that have been trading traditional markets for a long time, it drives them insane that it's this simple. They want it to be so complicated. But the fact is, every 4 years, the Bitcoin production gets cut literally in half. Layman's terms, today there's about 900 Bitcoin being mined per day. In 2024, sometime between March and April, it's going to go down to 450 Bitcoin per day. You can't understate the important, or you can't overstate, the importance of that. Literally cutting the supply in half. And kind of example I use is like, imagine if every 4 years in the United States, we cut the amount of oil and gas coming in by 50%. Imagine how expensive gas would be in 20 years from now. It would be insanely expensive because supply and demand would dictate it. Well, supply and demand is built into the Bitcoin code with this Bitcoin halving. And every 4 years during the presidential election years, we see Bitcoin hit an all-time high. Every 4 years in the midterm election years, we see the price of Bitcoin bottom. And that's where we're at right now. And everybody always says the same thing. They say, it's different this time. There's this many more people in crypto. People know about this now. You can go back as early as 2012 and you can look at news article after news article after news article. Every single time Bitcoin was near an all-time high, every single time Bitcoin was near a low, every single time the Bitcoin halving was occurring, people were always saying the same thing. It's different this time, and they've been wrong for 13 years. It's the same. It continues to be the same. It might change one day. Maybe when the amount of Bitcoin being mined per day is much, much smaller. I think we still have another 3 or 4 cycles left, at least, kind of going at this pace. But the adoption doesn't really factor in. All the adoption for Bitcoin does is it kind of adds fuel to the fire for the bull runs. But we're still seeing people, when the price hits a peak, leave the space in droves. And that's going to continue. People are always looking for a quick buck. And so last year, I was looking at the price of Bitcoin. And, I said that this year was going to be a bear market 3 or 4 years ago, because it's just obvious the way that this has continued on. And so I was very confident. I was on a show last year with, 5 other people. There were 6 of us on the show. And 4 of them were literally laughing at me for saying we were going to be in a bear market next year. And then I was like, no. We're too far along now. The price of Bitcoin is pretty much only going up from here. Maybe have a little retrace. Well, we've been down over 70%. Again, the average is 85%. And we believe we may not touch 85%. That's $10,366 would be that price point. But somewhere in that 78 to 85% range, we think is where Bitcoin's going to bottom out later this year.
All right, so we got more pain to go. How low is it going to go, Bitboy?
Well, that's a great question. And I think, for us, we've had a target on this $10,000 to $14,000 range pretty much ever since, I think it was back in April, we called this officially a bear market. The Russian-Ukraine stuff kind of complicated things because, traditionally, war has been good for markets. I know it sounds very callous, but the fact is it's true. So we thought maybe we could see some potential upticking from that. And we did. We saw it go up through April. I think it got back up to 48,000, I think is where it peaked out at around the Bitcoin conference. And then it just, shot back down. As soon as it went back below 40, I knew at that point, okay, we are definitely in bear market territory. And so we called it officially a bear market. We did a video where we looked at when, kind of a timeline looking forward. And that's where we started with this $10,000 to $14,000 range. Like I said, 10,366, the exact number would be an 85% drawdown from the all-time high. And interesting, you were doing something pretty cool with your 10-year anniversary when Bitcoin hit its all-time high. I was celebrating the Braves winning the World Series. I was in Houston for the, my local team here, the Atlanta Braves. Got season tickets. Went out there to Houston with my son and one of my best friends. And, the next morning is when Bitcoin hit an all-time high. I was just way up here. It was definitely cool to see. But now we're on the bottom side. We're on the downswing. So from that peak to where we think we're going to see somewhere in the $10,000 to $14,000 range. Now, I'm starting to wonder at this point, because I'm pretty sure we were definitely at least one of the first channels, if not the first channel, to officially put out, we believe $10,000 to $14,000, even when it was at $38,000. We believed that that was going to be the bottom range. Now that $10,000 to $14,000 range is like where everybody's saying it's going to go. Now that everybody's saying it's going to go there, I'm specifically looking at kind of 13.5 through 15,000 as a potential bottom. Once it goes down into that range, I've been telling my channel right now, we're on bottom watch. It could happen any day. We believe it's probably going to happen near the end of November, beginning of December, but we're within a margin of error here where we could if the Fed announced something crazy or, we had another Celsius situation, we could see it plummet further and have a large wick sooner. But when it hits that $13,500 to $15,000 range, we're definitely going to be adding a lot of ammunition in our personal buys for crypto.
Well, that brings me to the next point. How do you trade these markets? I think a lot of people would be curious over the last year. You kind of see that bear market coming. You've been in these for a long time. You have a pretty big portfolio, a varied portfolio. You're public about your portfolio, and people can go watch the videos there. And I love the fact that you are. But how do you go in? Because trying to buy the bottoms is usually a mistake, especially for beginners. I wouldn't advise that to anybody watching. But how do you kind of get in when you feel like the low is coming?
Yeah. Anybody who buys the exact bottom or sells the exact top, they're just lucky. Like that, there's not a formula to that. What you want to do is you want to be within a range. You want to be close to it. Like if you would have sold at 65,000 and the peak was 69,000, we certainly would have called that selling the top, So for the bottom here, you got to really look at it in ranges. Now, what we've done is we've kind of staggered our buy orders, not just for Bitcoin, but for other altcoins as well, based on where Bitcoin is going. So the numbers we're specifically watching, if we make a new low and go below 17, we have some buy orders there. Then we look at that $10,000 to $14,000 range. And what we've done is we've said, okay, if it drops down to 13.5, we're buying at that point. Then we say, okay, at 11,000, we're going to have some more buy orders there as well. Then we also have some buy orders at like 9,800, right? Because if it were to wick down really hard, it could wick completely through that range, and then it could bounce back really quick. If it's the high nines, I think we're going to get a large bounce very quickly. Then we also have some lower price points as well. There are people with targets anywhere from $3,000 to $7,000. I don't believe it's going to 3,000 by any stretch of the imagination, but we do have some buy orders in the $7,000, $7,500 range. Worst case scenario. Now that's a much smaller amount that we have dedicated to that. Why? Well, because if it drops down that low, your reward versus your risk there is much, much higher. So you don't have to allocate as much capital on those kind of almost unrealistic numbers, but still within the realm of possibility. So that when it comes to trading this market right now, like if you're leverage trading, the market is very finicky right now. You look for short-term hits and be done with it. If you can make some profits leverage trading, you pull out your profits. This is probably not the time you want to ride a short all the way down or you want to ride a long all the way up. We've been in a lot of choppy sideways action. It's a hard market to trade. If you're into leverage trading, then you're really looking for from the peak down to close to a bottom, or you want to get somewhere in the lower numbers and then be able to ride that all the way up. Because most of us believe there's probably more downside, I don't think it's the time to be putting out a long. But also when it comes to shorts, if you're looking for long-term shorts, there's just not as much bang for your buck in this area, because there's a lot of support levels below 17,000 where it could bounce up very quickly. You could, if you didn't have a stop loss, use proper risk management, and didn't move your stop loss based on profit, you could actually make a massive amount of profit and then wick all the way back to a loss in 10 minutes. That's the kind of thing that can happen when you're doing those kinds of trades. So we're really talking to our audience a lot about, just spot trading and trying to get good price points and trying to stagger your buy orders, at numbers that make sense. Traditionally, I think this is a very important aspect as well. Traditionally, what we've seen is Bitcoin bottom and then go sideways for a year. When it comes to altcoins, now there was a little bit of fireworks in 2019. 2019, it went up to 14,000 and then went right back down under 10 again very quickly. It's the highest it reached after the peak in 2017, December. But what you want to do is with altcoins, you actually have a much bigger window to buy. Those altcoins will generally bottom out and stay sideways sometime after Bitcoin bottoms. Like if you look at Cardano, it's at 5 cents for almost the entire bear market. you know? So with altcoins, you don't have to feel as antsy, like I got to come in, I got to make these buys, I got to make these buys. We are certainly seeing Bitcoin dominance drop, and we are seeing Ethereum dominance on the rise thanks to the merge. We're seeing altcoins in general on the rise against Bitcoin right now. So we could potentially see something different there. But in general, you got a long time to stagger those buy orders for altcoins.
And you mentioned something earlier, when a lot of people are calling for a certain price target, that usually means it probably won't happen. And I think we saw that when everyone was predicting the 100,000 Bitcoin to the end of the year.
Right.
And I try to explain this to my students, and they're like, well, what do you mean? Just because everyone thinks something's going to happen, why wouldn't it? And it's like, well, that means they're positioned that way. That means they'll all get stopped out with there's a little jitter in the market, and then that can push the market the opposite. So when you hear everybody calling for that range, like you said, it makes you maybe move your buy up a little bit.
It does.
There. Okay.
Well, you always want to, like, you never want to be trading on round numbers, really, because round numbers usually don't hit. It usually plummets below them or it bounces right before them. And the reason is because many of these round numbers are psychological levels. Like if you look at Bitcoin, 50,000, for instance, 40,000, 35,000. You look at, previous markets, you looked at the $10,000 level, you looked at 12,000, you looked at 15,000, nice big round numbers. That's where most novice traders, which is the vast majority of traders, they put their buy orders, or in the opposite case, their sell orders on the way down. Like 50,000 was a huge place where people had sell orders because it makes sense. It's a psychological big round number. So it's not that the thinking of the general sentiment of the overall crypto trader means it's not going to go to a certain level because it's counter to because they're saying a number doesn't mean it's just not going to hit that number because people are saying it. It's because of the tangible actions of the literal functional buy and sell orders that people place at those round numbers. So when everyone's thinking $10,000 to $14,000, what does that tell you? That's going to tell you people are going to have a ton of buy and sell orders at $10,000. They're going to have a ton of buy sell orders at $12,000. They're going to have a ton of buy sell orders at $13,500. Same thing at $14,000. There will be some people that will stack above that because 15,000 is another nice round psychological number. So what you're looking at is a massive amount of orders that can trigger actions. So it goes down to 15. It'll be very interesting to see if 15 could be a strong level of support. It never has been before. We don't have any strong support in the past around that number. And that's why I tend to think it'll go through that floor. But I think there's going to be a lot of buy orders at 13,500 that could propel it upwards. And also probably at 14,000 because that's the top of the range. You just got to look at what's popular of the ranges people are talking about. You can guarantee that's where a lot of buy orders are going to be. So it's not, it's not just counterintuitive thinking. It's more functional buy orders and where they're placed.
What percentage of your portfolio is cash right now, or cash equivalents, or stable coins, at least asset-backed stable coins?
Yeah, a good bit. Right now, we're probably over 40 to 50% right now of that. And I think that really what people have to understand is this has been a pretty big change for me personally in the way that I look at the crypto markets. In previous cycles, I was all about, let's get every single dollar we can get into. I've been much more patient this time. And we've really learned, look, you got to trust what you know to be true. And I think if you go back to last year, everybody thought Bitcoin was going to 100K. Everybody. Totally logical. You look at the rainbow chart, you look at the stock to flow chart, you looked at crypto influencers who are basing a lot of their information on those two charts. It was totally realistic to believe in 100K. It didn't happen. So what happened there is that I said we were going to have a bear market this year. I actually said the top of the crypto market, I said this 2.5 years ago, the top of the crypto market would be in between Halloween and Thanksgiving in 2021. We nailed it. But you know what I didn't do? Take my own advice. I was still focused on that 100K, even though I shouldn't have been. I should have said, okay, we're right in this range. We just hit a new all-time high. It's retraced pretty big. Let's clear out a bunch of positions. And we didn't do it. And then I said, okay, well, if it goes below 38, we're going to sell out of everything. And then it went below 38. I got nervous. I didn't do it. And really what I've learned through the last cycle, especially being responsible for so many people in crypto and their education and things like that, is that I got to trust what I say a lot more. I got to trust what I believe because it's based on data. It's based on research. What happened is last year, I was basing it more on the feelings You got to get rid of your feelings in crypto, in markets and trading in general. And so this cycle on this bear market, look, I believe I know when it's going to bottom. It's going to bottom end of November, beginning of December, certainly within a range of error where it could happen now, it could happen through January. But when we see prices go down during that time period, we're going to trust it. We're going to allocate our capital. We haven't got there yet. So when we get there, we're going to allocate our capital. And if it bounces before that, then so be it. During the last cycle, we didn't trust ourselves enough. This cycle, we've learned we got to trust ourselves more on what we know to be true. And this is why it's so important for people to do their own research and make a plan and implement it. And one kind of cool thing that I think we're going to be doing, right? Not for 100%, but I've been in touch with somebody who's doing actually they have a software that will create an exit plan for you, and then people can follow it. So that's one thing we're going to be doing in the next market is we're going to be creating an exit plan well ahead of time, and we're going to follow that exit plan, and then people are going to be able to follow along and track that exit plan as well. So I think that's going to be something kind of cool that we're going to do to kind of hold us accountable, because in the moment, it's so freaking hard to do. In the moment, your feelings are so overwhelmingly bullish or bearish, it's hard to make the right decisions. And look, I'm an emotional guy. I'm an emotional guy. I tend to really wear my heart on my sleeve. And I think that, people that watch the channel, they know that very well. And I think that is a big, that cripples me in the crypto market. And so I'm really trying to get away from that, do what we know works, create our own plan and stick to it.
Well, look, this is an important teaching moment and learning moment for anybody watching, whether you're new to crypto or have been in crypto for a long time, because Ben's being really honest, and I will say I've made the same mistakes in crypto. It's like we should know better, right? We've been in this long enough. We know what stop loss orders are. We know how to average in and out of positions. We know to hold cash. We know to do this, and still, oftentimes we don't follow our own advice. And This is what markets do to you. And I always tell my students, the minute after you place a trade, you now have an emotional relationship with that trade. By definition, you're up money, you're down money, and you're already making improper decisions, which is why ideally you want to put your, as you say, exit scenario in before you put the trade on, because that's when you don't have an emotional relationship with that trade. That's when you can see clearly. Once that thing's on, you're never going to make good decisions. It's like the movie Fight Club, where Edward Norton is saying to the guys, like, untie me. I don't want to do this anymore. And they're like, yeah, you told us you'd say that, sir. And it's like, okay, that's because he already programmed them to not listen to what he's going to say, because they shouldn't trust that future version of him. And it's like, that's what you're like when you're trading crypto. And look, I was on Wall Street for 15 years. I traded stocks and bonds and commodities, every market under the sun. Nothing prepares you for crypto, because crypto is 2, 3, 4 times more volatile than anything I've ever seen in the marketplace. And so what happens is you get even more emotional about it, and you cannot think clearly or see clearly in this market. You just can't. And so you cannot trust yourself. There's that the old Greek myth where Odysseus, he's like, he's going through the Mediterranean or something, and he's like, we're gonna go by the sirens, and they're these crazy girls that they'll make you, that they sing you, and they'll make you make bad decisions, and we'll crash our ship. So he makes his sailors put wax in their ears, I think, and he says, don't listen to anything I say, because I'm gonna say, go to the sirens, and we're gonna die. So they all stick ear in their eye, and he's there, and he wants to listen to them, and he's telling them to go there, and they're just not listening. That's a bit like crypto's like sometimes. It's like you got to get the wax in the ears and stick to your game plan more than anything. So I appreciate you saying that, because like you said, you get emotional and passionate. The reason we're in these markets and even talking on camera is because we are passionate, but you just can't trust yourself once you put those trades on, right?
Yeah, I mean, that's definitely how it is, and I think it's really almost like anything else in life, where, you always tend to give better advice to other people than you do yourself. Right. If somebody's like, I'm scared of this or that, you can coach them into like, no, you can get over that fear. You can do this, you can do that. But ultimately they got to be the one to make the decision. And then you sit back and you say, man, I should probably take that advice myself. I don't do those things. I think that's really, really, really appropriate. Yeah.
It's like, I always tell my students, it's like getting married in Vegas. It's like, and sometimes it's the good news you have to worry about, how, like the 20 tequila shots you do when you go out. I know, I don't drink anymore because we learned the hard way, right? But like, when you're going out and doing those things, it's sometimes the good times you have to be worried about and the bad decisions you make in those good times. It's not always just the bad time decisions. So it's something that people need to put in. They need to put those stop losses in and think about that stuff. So look, I'm glad you said that, and it's good advice for people to know. And now you're going to be averaging in or looking at some of these levels. We should probably talk about the merge, because that's been a big thing that's on the news. It's something that you've been talking about for a long time. You said the biggest event in crypto history. That's a bold statement, Ben. Why do you say that?
Yeah, I mean, look, outside of the creation of Bitcoin, the creation of Ethereum, I mean, obviously you look at those things, you say, well, what could be bigger than the creation of Bitcoin? Well, absolutely nothing. But once a coin is in its lifeline or in its lifetime, this is the biggest event we've ever seen. You really cannot put into words to someone new how important this event is. Now, look, a lot of people are watching like, oh, the Ethereum price didn't do anything. What's a big deal? It went down. That doesn't matter. That's irrelevant. It's kind of like people with the XRP case. If the XRP case or the Ripple case ended tomorrow, price is not going to go out of control. It's probably going to double, probably. But what's important is the exchanges putting XRP back on the exchanges. So in the next bull run, when people are excited, people have access to buy. Now, that's going to be another huge event when that happens. But it's kind of the same thing with Ethereum here, where right now it doesn't matter that much. But let me explain to you why this is so big. This fixes the tokenomics of Ethereum compared to Bitcoin and actually makes Ethereum have superior tokenomics to Bitcoin.
Woo.
Right now, I think when it comes to Ethereum, I think there's about 120 million Ethereum. Let me actually pull that number here so I have the exact number. I don't want to misquote it. Right now, when it comes to Ethereum, there are 122.4 million Ethereum out there. Now, when you look at Bitcoin, obviously we know there's like 19.1 or 19.2, somewhere around there. So the price of Bitcoin is going to be very hard for the price of Ethereum to ever pass the price of Bitcoin. It is possible, though, but it's going to be very difficult because of the supply. It has a higher supply, about 6 times the supply of Bitcoin, right? Well, the thing is over time, there will be more Bitcoin added in to the supply, whereas with Ethereum, it's possible that we're actually going to see deflation. We're actually going to see the number of total Ethereum go down. We've already seen it since the merge. Now, just so everybody briefly understands what the merge is, it was a move from proof of work to proof of stake. You're going from mining as the main consensus mechanism to now it is going to be validator nodes. People hold a lot of Ethereum on a node on the network. It gives them the motivation to be able to, want to send through those transactions through, and they get a return on that. It's good environmentally. It has made, Ethereum now 99.8% more environmentally friendly. And we know that's a big talking point for a lot of people across the world is, solar energy and, power. It's the new oil, it seems to be. And so that's important to people. But functionally, what it does is actually a lot more important to the supply. Now, how can Ethereum go deflationary? Well, you got to go back to last year in August, EIP 1559. What this did was it made it to where part of ETH transactions are now getting burned. When something gets burned, that means it gets sent to a dead address that cannot get sent out of. It will never be touched again. It gets removed out of the supply. So what happens here is during the merge, the inflation rate of Ethereum dropped 95%. The amount, and what that means is the amount of Ethereum that you now get in 20 years equals the amount of Ethereum you would have gotten every year. So it's 20 times less inflationary. Well, when you add in the burning mechanism from EIP 1559, that, by the way, only takes place when there's high congestion on the network. The more activity that occurs on Ethereum, the more deflationary it's going to be because EIP 1559 and those transaction fees get burned. So when you're looking at a bull run for Ethereum now, you're looking at more people coming in, more people buying NFTs, more people doing blockchain gaming, more people doing metaverse things, more people doing decentralized finance. The more people that come in, the more deflationary it's going to get because the more of those transaction fees are going to get burned. More transaction fees are going to be burned at high levels of activity. than the inflationary number of Ethereum. So for all intents and purposes, as people are rushing into crypto, not only is the price going to be going up of Ethereum, the number of coins is going to be going down. And we understand there's supply and demand, that means that the demand is going to be higher as the supply gets lower. If you have 100 coins and they're worth $100 and 3 people lose their coins, there's only 97 coins left. Well, you still have that same value of $100 going around there. And that's kind of what we look at with Ethereum. We've never seen anything like this. This will push Ethereum past Bitcoin in market cap. How high can it get to pass Bitcoin in price? Certainly not this cycle. You look maybe 2, 3, 4 cycles down the road. Maybe that becomes, something we could look at. I think it's going to be a long time down the road, if that happens. But certainly Ethereum, by the end of the next bull run, will at least touched, if not permanently sit at the number 1 spot on CoinMarketCap.
All right, Bitcoin maxis around the world are, blowing you up now on Twitter as we speak, because they don't want to hear this, of course. To say that the tokenomics are better than Bitcoin. I just had Michael Saylor here on last Friday, and I got a lot of other people calling for the end and the death knell of Ethereum, and including thanks to your good friend Gary Gensler talking. We'll get to that shortly. The merge is interesting because, like you said, environmentally friendly, which apparently is a big deal to a lot of Fortune 500 companies and people.
I feel the same way you do, apparently.
Yeah, apparently it is. And look, again, if you're a Fortune 100 company and you got to play to shareholders and, the Twitter mob, then great. If that helps, cool. Like you said, looks like it's now deflationary, whereas Bitcoin technically is still inflationary. And then the other great argument I heard Raul Paul make is now there's potentially a yield curve on Ethereum. Because you can stake it now, you've kind of got a rate of return you can lock in. You've got a kind of a yield-bearing asset, which if you're a pension fund or a Wall Streeter, that's potentially gold, and it potentially sets up a yield curve, which is kind of Wall Street speak for different rates of return for different maturities, which means you can build on the back of it. A lot of good. Now, we saw Ethereum come off price-wise. And again, another phenomenon I got introduced when I had my first 6 months on Wall Street in 1993, where they said, buy the rumor, sell the fact. And I know you talk about this a lot, and it's a term they don't teach you at Sloan School of Business when I was there, but you learn it in real markets. And that is that often opposite things happen from a human expectation perspective, which is the price went up with Ethereum pre-merge, and it did significantly. And then, of course, after it all went through successfully, it came off. And if you're new to the trading environment, you'll say, well, why did that happen? Maybe you can speak on to people why that did happen and whether that's important or not.
Yeah, so first I'd like to talk about why I did not think it was going to happen. I didn't think we were going to see buy the rumor, sell the news. I really underestimated this. And the reason is I go back a year ago to EIP 1559. When it launched, it was an actual functional change to the network, and it caused the price to spike and eventually hit its all-time high. It actually went straight up from EIP 1559. Now, I want you to think about this, Brian. How many more people were into crypto last year than this year?
Yeah, what, 3x?
Significantly.
Yeah.
Right? A significant portion. Way more people were into crypto this time last year. You look at the views on videos, you look at the number of transactions, you look across the board, look at NFT sales, and it's not even close, right? So I guess my thing was there's less people here now than there was then. And if that didn't, a functional change in the network, that didn't cause buy the rumor, sell the news, then I kind of implied that I didn't think it was going to happen this time either. And it certainly did. Now, I was in Alaska hunting while the merge happened, so I didn't get to watch it. I got back. I was gone for 2 weeks, no internet access, had no idea how it went. Was definitely happy to come back and hear the merge went well, the price, whatever. But what happens is that people start hearing this news, and they know that the smart money knows that retail is going to come in and buy this thing all the way through the event, where they're just going to dump it at the event. And if it goes up a little bit, okay, but the price rise beforehand was so significant that taking profits off the table is a better choice for them. And so that's what tends to happen. So buy the rumor, sell the news is basically when you are buying an asset up to a time period where something is supposed to happen. 90% of the time, this is based on announcements and news, not functional changes to networks. And so what happens is all hype driven. With the functional changes to the network, it can be a little bit different. A lot of times when projects have launched their own main nets, people looked at that as buy the rumor, sell the news, but that didn't work out. EIP 1559 didn't work out. But you know what works exactly like this the Bitcoin halving. So the Bitcoin halving, and it doesn't matter, we said this all until we were blue in the face in the last market. We said, look, Bitcoin halving is great. It's going to cause the price of Bitcoin to hit new all-time highs, but it's not happening the day the halving occurs.
Right.
Doesn't matter. People still bought it all the way up. And then after, I think Bitcoin went, if I'm remembering correctly, I believe Bitcoin went up to, I think, about $11,000. It was sitting around 8 as the halving approached and went up, I think, to 11,000. And then the day before the halving, actually, we got the dump. It was actually the day it occurred. And I think it went back down into the 9s, maybe into the high 8s. And it was a big move. It was a huge move for volatility for Bitcoin. We were sitting there like, well, we told you this was going to happen. And then for the 2 months after the halving, people lost interest in crypto again. Like, we thought this was the event. It doesn't matter how much you tell people that this is actually a catalyst for growth. It's not the catalyst for the price to go up today. And just sort of the novice person, for some reason, they just can't seem to grasp that concept with the Bitcoin halving. And I guess what we saw with the ETH merge was definitely something very similar to that. Price is now, at the time of this recording, it's down in the $1,300 to $1,400 range for Ethereum. I think it peaked out over $1,800. And the difference between the halving and the merge, I would say, though, is this is a once in a lifetime event compared to a once every 4-year event. So it led to a little more uncertainty around my ideas of what could happen range from, buy the rumor, sell the news, big dump, all the way up to maybe it could go up to 3,000 and then come back down. It was just a wide range because we've never seen anything like this before. And, if you think about poker, I love to play poker. I got, made it all the way. I was the leader in the World Series of Poker main event on day 5. Last year it was so fun. A dream of mine to play. First time I ever played in it. I ended up going out in 135th place with cracked aces on TV. You guys can go find the clip, but it was a lot of fun. But in poker, you operate on ranges. You will never know exactly the hand your opponent has. You may guess and you may be correct, but the professional players, they look at it in terms of ranges. Like this guy has got something between pocket jacks and ace king suited. He's gotten something in between that. And I've got to make my decisions based off of that range. Kind of the same thing with this Ethereum merge. Like there was a range of different things that could happen, and you should have operated in that. You shouldn't have thrown 100% of your capital into Ethereum pre-merge and then held it through the merge. If you want to do that and then take profits, then that might have been a good thing to do. But you got to operate within the ranges of what might happen in crypto, always remembering that black swans exist, and there could always be something out of your control that you can't think of happening. Like nobody thought of a pandemic really happening. Certain people might have had an idea. It's a possibility. I'd never even heard of a pandemic before that happened. And so, you got to operate in the presupposition of ranges of what could happen to an asset. Also remembering the worst case scenario could always happen. You got to factor that in as well.
All right, but you genuinely thought that if it went through successfully, there actually might be some price action to the upside on this.
Well, like I said, it was part of the range. Like, yes, but I didn't think it was going to make a new all-time high. I said the best case scenario, maybe it will go up to 3,000 and come back. It went from, $1,000 low or a $900 low a few months ago, went all the way up to $1,800, $1,900. That's pretty strong. That actually was where it went to back in May of last year when we had the gigantic dump. If everybody remembers that, it went down to the $1,800, $1,900 range. So I think that it was still a good move up, but it didn't go up as high as we didn't predict it was going to go there. We just gave that as the most bullish scenario it could possibly be. Really, I was surprised it dumped so hard. A lot of people took profits. I think it really touched on it because when you talked about Raoul Pal, he actually wrote the foreword to my book, Catching Up to Crypto, coming out in January. You pre-ordered it on Amazon or Barnes & Noble. He wrote the foreword to it. I love Raoul Pal. He's a great guy. What he was saying about it becoming a yield-bearing asset is, well, now this makes it gigantically appealing for institutions. Well, institutions have already been on Ethereum for a while now. And I think what we saw with this buy the rumor, sell the news is that last year with EIP 1559, the market was retail driven at that point. Now with the lower amount of people in, it's institutionally driven. And I think some of those institutions are probably some of the big offloaders of Ethereum. And, maybe they made it drop down because that's what institutions can do. They have enough money and power to actually control the price to some extent, especially in a watered down market where retail's gone.
Yeah, I think that's true. And I've got some kind of high level Wall Streeters in my academy, and they said that the institutions and some of the hedge funds were putting on the ETH Bitcoin spread trade, and we watched it go from zero point zero 0.07 right up to 0.085, and they were making money off that, and then they probably dumped it right around or pre-merge. And now that's gone down to 0.07, pretty significant move to the downside. And it looks like it'll probably stay there for a little bit. So yeah, it's been interesting to watch, and I agree from what I hear, that's probably a lot of what happened there.
Yeah.
Let's talk about now the state of the affairs, the state of the union post-merge, because this is interesting. I had Sandeep Nawal on the show about 10 days ago, who obviously runs Polygon. Matic had a big move in price over the last 6 months as people saw that layer 2 becoming even more necessary, more functional, post-merge. And a lot of people don't understand that the merge itself, I think, only brought transactions up from like 13 per second to 20 per second. But I think because of the additional sharding and a bunch of the environmental factors, it means that it can empower a layer 2 in a massive way. Now, Sandeep was on my show about a year ago, and I must say, this guy's got a lot more swagger in his step now. And he said, look, Brian, we're talking to more people out there on a level of 10x when it comes to developers, clients, et cetera. We know what people want. We come from a dev background. And in his mind, he said, this is ours to screw up. He said, these L1s don't stand a chance with what we're doing right now as a network with the ETH post-merge. And I talked to him pre-merge, by the way, and he said, look, everything we see like it's going to go through. And he said, we're above the water. He said, nothing that happened in the merge is going to affect what we do anyways. But I'm telling you, Ben, he said, it's basically ours to screw up, and these L1s don't stand a chance. Now, I've been on the phone with some AVAX people recently, and I quoted back to them. I don't know how impressed they are with him saying that, but what do you think about that assertion? As then, right now, Polygon is set, or Ethereum is set to dominate these L1s. What are your thoughts?
Yeah, I mean, Ethereum is a leader in the house. There's no question about it. And I think that, when it comes to, I think Cardano is the only one that stands a chance against it. And the reason why I say that is because Cardano's smart contract language, Plutus, is far superior to Solidity. It's much easier for regular developers to come in and build than learning an entirely new language. Plutus has kind of 3 subsets of it. And basically, if you have common, regular computer programming language experience, very easy to port over to Cardano. Ethereum has by far the biggest developer community right now, but Cardano is trying to attract a bigger pool. And we don't know how that's going to work out yet. And kind of what I've been on the record as saying is in Cardano versus Ethereum, I think Ethereum still will stay number 1. It has to mess something up, I believe, for Cardano to pass it. Cardano, though, is the only one that I think has a chance to pass it. So that's kind of how I see the layer 1 wars working out. I mean, Solana's a joke. Obviously, I think people see that at this point. Any blockchain you can just pause from your high perch, I think is not going to be a good blockchain. And the people behind FTX and the people behind, Solana, bad people, this is not something I'll ever touch again. But what I would say is when it comes to the layer 2s, this is what people have to understand. We are so confused on what a transaction is. Okay. Why? Our whole life, what has the word transaction meant? It's meant I bought something. That's what a transaction is, right? So when you look at Visa doing, I think it's 11,000 transactions. No. It's about 1,800 transactions per second that Visa does. And you look at Ethereum and you say, after they go through all the stages, right? The merge, the surge, the verge, the whatever, ending with the splurge. What you'll see is, and that's probably 10 years down the road before we get there, by the way, sharding is next with the surge, which I think will be, probably a 2 to 4 year timeline, at least on that. What you'll find is that it's talking about doing 100,000 transactions per second. And you're like, what? If Visa, the number 1 processor in the world, only does 1,800 a second, why do you need 100,000? Well, the reason is because the word transaction in crypto doesn't mean a purchase of a good or a service. It means an action. Every action that takes place on the blockchain is a microtransaction. At least some are larger than microtransactions, but at least a microtransaction where a small fee is going back and forth to do an action. It's not you're buying something. And I think that's where people have really gotten confused, is because with Visa, you don't do anything they have two kinds of transactions, I believe. Number one, you buy something. Number two, you're staying at a hotel and they put a hold on your card. Like those are really the only two things that really are transactions. We got to get out of that traditional way of thinking to understand why it's so important that not only Ethereum can do 100,000 transactions per second.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.